Hi everyone, this is Paul Fouché, Chief Investment Officer at New Road Capital, just giving you your December market update. Firstly, a happy new year to all of you. I hope that 2026 is a phenomenal year ahead. 2025 was a great year for New Road, and we're hoping that 2026 will continue with that momentum. So getting into the markets, quite a quiet month, obviously, as many people are away, or most people are away. But still, if we look at the market, some big moves. Very bullish on the local side. So local shares up 4.6% for the month. Very good, predominantly driven by gold and platinum miners. Something that we've sort of been talking about for a while, but that rally continues. Then if you look at MSCI World, that's still developed markets up about 0.8%, and then emerging markets up about 3% for the month. If we look at US inflation, big downside surprise and something we've been talking for a while. So US inflation went from 3% all the way down to 2.7%. So you're still just not seeing any inflation coming through from the tariffs, and we think very bullish actually going forward. Core inflation, which excludes food and energy, down at 2.6%. So we've definitely seen that inflation number turn around again and big downside surprises. And we think you're going to probably see that going forward over the next few months as well, that continuing to see those deflationary forces coming through. If we look at food and energy prices, still very much under control. So wheat at $5 a bushel and gold and oil, at about $57 a barrel. It's hard to say what will happen to oil after the Maduro capture. We think probably the opening up of Venezuelan oil will have some downside pressure on the price of oil going forward, which we think will be good for the global economy at the end of the day. And actually good for the economy of the citizens of Venezuela as well, as it does bring money back into the country. So we think probably, the, let's call it inflationary or deflationary pressures from oil or energy are going to be quite subdued from here as well, with that additional capacity expected to come online as well over the next few months. South African inflation very much under control, sitting at 3.5%. Core inflation at 3.2%, so still very much within our sort of target band, the new target band being essentially 2 to 4%. So it's got a 3% target with a 1% range on either side, so 2 to 4%. So within our range, looking good there. Rand dollar, so the rand appreciated very, very much over the month. It started at about 17.10 to the dollar and ended at 16.56. So very strong rand over December. Suddenly US dollars and euros and pounds and everything looking a lot cheaper to go away on holiday now, just after the holiday season. SA-US 10-year bond spreads still looking decent at about 4%. The Albi had a phenomenal month as well, up 2.7% for the month of December. And that yield curve obviously coming down quite substantially on that rally, but yields, as we say, still looking positive. We still like the bonds. Nothing changes on that story. Offshore bonds, so if you look at the US bonds, down about 2.5% for the month, which we find quite surprising considering that the inflation number that came through was quite a big downside surprise. So we would have actually expected to see those bonds rally, but they haven't yet. We think when the market does start to come around to the fact that you're not going to see inflation through the tariffs, we think that is those treasuries could rally quite hard. So we think it provides a good buying opportunity on those longer end treasuries, and we have been buying some of those in our portfolios. So it offers protection against any volatility within the portfolios, but number two, we think it's actually just a good buy and offering good value at these levels. So you're getting, on the longer end, you're getting north of 5% yield in US dollars, which we think long term is actually very attractive. And we think you could probably get some capital uptick as well when those yields start to rally and those bonds start to rally on a lower inflation outlook going forward. So that's the basics for the month. As I said, quite quiet, not much happening, but obviously the market still can move quite a bit. As always, if you need anything, please give me or the team a shout. And then obviously we will give you your February or your January update in early February. All the best and good luck getting back into the year. Ciao, ciao.